Have you ever blamed the markets when a trade didn't go your way? I don't blame you. There was a time when I used to do the same. Part of the reason we react this way is because most of us were taught that the markets is this violent animal that is always out to get us. We've been taught that we have to fight to make every day work. But in this video, I'm here to tell you why that is a big load of So we've all heard the idea, right? You're this lone survivor stuck on a cold, snow-covered mountain, and the market, is this elephant-sized wolf that is always trying to hunt you, trying to get you. Now, I can understand why some traders could see things that way. There was a time when I was taught and thought the same. But thinking this way is a complete waste of time. If you're still out there trying to beat or fight the markets, you're just wasting your own time. Now, yes, I can already hear the objections, but Arno, it's a zero-sum game. But Arno, when I lose, the market wins. Listen, as a retail trader, we are such a small and insignificant part of the total industry that the broader markets could not care less about our trading accounts. There is nobody sitting on the other side of that screen fighting you. The only person you're fighting is yourself. Yes, of course, there are sometimes unscrupulous players out there, and they have been known to sometimes manipulate the markets to steal their clients' funds. So I'm not talking about obvious scams here. If you didn't do your due diligence on a broker in the first place, that's on you anyway. What I'm talking about is that mindset that the market is always out to get you, that you always need to have a bare knuckle fight for every single pip. Please don't be that guy or gal. Yes, when you lose, someone else wins. And yes, that does make trading a zero-sum game. But if you are still running strategies that are trying to always fight the markets, then it's just a waste of time. You see, some traders spend their entire lives trying to build mechanical trading systems that tries to fight the markets. And then when those systems don't work, they always go and blame the markets. You'll often hear these traders say things like, the market is rigged, right? Or the market is just a big Ponzi scheme. I mean, we've all heard them. What you'll notice about these traders is that they will often lose money and then blame the markets. But when they win, it's all because of their miraculous system. So it's never their fault, right? For them, it's not their trading process or strategy or mentality that's wrong. For them, it's always the markets that's to blame. Now, the great and freeing news is that there's actually a much better way to go about your trading. What about, and I mean, I'm just spitballing here, but what about we stop trying to fight the markets and just find a way to trade in line with the market? How about we stop trying to stop the train and instead we just try and get on it? But is this magic even real, Arno? Is it even possible? Yeah, it's possible. And it's called macro fundamentals. Our aim as retail traders shouldn't be to fight the markets. It should be to leverage fundamental analysis skills to try and stay on the side of the institutional order flow as much as possible. It's not impossible to do, but you see, most retail traders would rather use an easy indicator to tell them when to buy and when to sell compared to actually learning how the real markets work. You see, looking at this list of key market drivers, we can see that technicals is a driver, but it's only one piece of a bigger puzzle. Which means when you think that you can only focus on that, then you're missing the bigger picture. Most traders would rather blame the markets for their losses than put in the time and the effort to learn what these drivers are and how they impact the broader markets. Some would rather trade blindly for the rest of their lives than just learning why markets move the way they do. But for those who have the discipline to learn what really moves the markets, it's a freeing experience. You see, knowing what really drives and moves markets helps us to make sense of a lot of the moves across major asset classes. And more importantly, it helps us to stay on the right side of the institutional order flow instead of being thrown around by volatility. Think about it this way. Have you ever seen a currency fall sharply after a central bank raised interest rates? Now, usually when that happens, you'll see the blame game traders calling it a rigged market. But traders who think that way simply don't understand that markets are a discounting mechanism. And that basically just means that markets price things in before they happen. So if markets think that interest rates will rise, they will start to price in that hike before it happens. So if markets are expecting a very hawkish hike and then gets exactly what they have been pricing in, They are already taking profits just as the retail traders are piling in to buy. Now, it's not because they, want to fight the retail crowd. It's simply the retail crowd that doesn't understand the risk of something very basic, like a buy the rumor, sell the fact price reaction. But luckily, those types of reactions are just a surprise for the uninitiated out there. For those who understand why they happen, it can be a great source of great trading opportunities. Now, please don't misunderstand me. Sometimes the markets will just do whatever it wants and do the exact opposite than anyone was expected. But that's the exception. That's definitely not the rule. So in a nutshell, no one is out to get you as a trader. The market has much bigger fish to fry. Also remember, just because a move doesn't make sense doesn't mean that the market is rigged. There is probably a very good reason for that move. So the next time that a trader blames the markets for losing, remember this video. Don't blame the markets, just get better at understanding what really drives them. Happy trading.